The Supreme Court's landmark decision, a moment that could reshape the future of international commerce. In a historic move, the Supreme Court has struck down the Section 232 tariffs on steel and aluminum, a key pillar of the previous administration's trade policy. These tariffs, once justified as a matter of national security, have been at the center of heated debate for years. The 6-3 verdict sent shockwaves through the economy, upending years of business planning and global trade relations. Investors and executives scrambled to understand what this would mean for their industries. Stocks for metal-using industries soared, as companies anticipated lower input costs and a more competitive global market. Meanwhile, domestic steel and aluminum producers saw their shares tumble, facing the prospect of increased foreign competition and shrinking profit margins. The dollar wavered as markets scrambled to assess the long-term impact, with analysts warning of both risks and opportunities ahead. This isn't just a legal technicality, it's a seismic shift for millions of workers, consumers, and business owners across the country, affecting everything from paychecks to prices at the store. The ruling questions the very foundation of presidential power over international trade, setting a precedent that could limit executive authority for years to come. For years, the tariffs sparked global retaliation, igniting a trade war that hit American agriculture and tech exports especially hard, costing billions in lost sales and market share. Now the Supreme Court has hit the reset button, but the economic landscape has already changed. Supply chains have shifted, companies have adapted, and some disruptions may be permanent. New trade alliances have formed, with countries seeking stability and new partners in a rapidly evolving global market. Undoing the architecture built around these tariffs will be complex and risky for the Biden administration, requiring careful negotiation and strategic planning. The central question: what comes next? Will the U.S. embrace a new era of open trade, or retreat in the face of uncertainty? The legal battle is over, but the economic and political fallout is just beginning. Lawmakers, businesses, and global partners are all bracing for what lies ahead. Will this decision usher in lower prices and renewed cooperation, giving consumers and businesses a much-needed boost? Or will it expose vulnerabilities in American industries, putting jobs and livelihoods at risk? The world is watching as the U.S. redefines its role in the global economy, with consequences that will ripple far beyond its borders. To understand this week's ruling, we need to revisit its origins. The story of the Trump-era tariffs is not just about economics, but about how trade policy can reshape global relationships and domestic industries. The tariffs began in 2018, when the Trump administration invoked Section 232 of the Trade Expansion Act of 1962, a move that would soon ripple across the world. This rarely used law let the president impose tariffs on imports deemed a threat to national security, giving the executive branch broad authority over trade. The administration argued that cheap foreign steel and aluminum endangered U.S. military and infrastructure needs, claiming that domestic production was vital for national defense. The move marked a sharp break from decades of U.S. trade policy favoring lower barriers and multilateral deals, signaling a new era of protectionism. Tariffs of 25% on steel and 10% on aluminum hit nearly all trading partners, including close allies like Canada, Mexico, and the European Union. The broad approach strained diplomatic ties and triggered swift retaliation as countries scrambled to defend their own industries. The EU targeted American icons like Harley-Davidson and bourbon. China hit U.S. agriculture hard, especially soybeans, creating uncertainty for American farmers and manufacturers. A sprawling trade war erupted, costing American farmers their largest export markets and raising costs for manufacturers, while also fueling political debates at home. Over time, some countries negotiated exemptions or quotas, but the core tariffs remained, keeping tensions high and uncertainty alive. The Biden administration kept most tariffs in place, tweaking some for allies but leaving the main structure intact, reflecting the political difficulty of unwinding such sweeping measures. For nearly a decade, these tariffs shaped investment, supply chains, and global alliances, forcing companies to rethink sourcing and production strategies. The Supreme Court's decision now dismantles a system that had become deeply embedded in the U.S. economy, raising questions about what comes next. The question is not just what will replace it, but how quickly businesses and workers can adapt to a new reality, and whether lost markets can be regained. The legacy of the tariffs is a changed global trade map, and a new set of challenges for policymakers, who must now balance economic growth with national security concerns. The economic and political scars of the trade war will not fade overnight, as communities and industries continue to feel the aftershocks. The U.S. must now chart a new course in a world that has already moved on, navigating a landscape forever altered by the choices of the past decade. The legal battle was led by importers who argued the tariffs were based on outdated and flawed investigations. Their case didn't challenge the president's right to act on national security, but focused on the lack of timely review. The Supreme Court's majority, led by Chief Justice Roberts, ruled that indefinite tariffs based on a single static finding exceeded executive authority. The court said the law required periodic review and updated justification for such sweeping measures. Without new investigations, the continued tariffs were unlawful, a check on presidential power. In dissent, Justice Gorsuch warned the ruling could limit future presidents' ability to respond to real security threats. The decision sets a precedent. Executive actions under delegated authority can't last forever without oversight. Customs must now stop collecting the tariffs, and importers may seek billions in refunds. The legal and financial consequences will ripple for years. The numbers reveal the true cost of the tariffs, painting a detailed picture of their impact across the economy. According to a 2023 Congressional Budget Office report, steel prices rose nearly 9% after tariffs were imposed. This price hike benefited domestic steel producers, but it also meant higher costs for manufacturers, builders, and consumers across the country. While a few thousand jobs were created in the metals sector, tens of thousands more were lost in manufacturing, construction, and agriculture, industries that rely on affordable steel and aluminum to stay competitive. The tariffs ultimately shaved 0.2% off U.S. GDP, translating to tens of billions of dollars lost each year, and a noticeable drag on economic growth. Now, with the tariffs lifted, steel and aluminum prices have dropped sharply, offering relief to many industries that depend on these materials. Equipment makers like Caterpillar expect their input costs to fall by 5 to 10%. This could lead to lower prices for consumers, increased demand, and renewed investment in American manufacturing. However, domestic producers now face a surge of global competition. Many warn of possible layoffs and even plant closures as they struggle to adapt to the new market reality. The trade-off is clear. Protecting one industry came at the expense of many others, highlighting the complexity of trade policy decisions. The challenge now is to unwind these policies carefully, ensuring that the transition does not trigger new disruptions or unintended consequences. Policymakers must manage this transition thoughtfully, working to avoid a new wave of economic pain for workers and businesses alike. The data underscores the urgent need for a balanced approach as the U.S. reopens to global trade, aiming for growth that benefits all sectors of the economy. Maps and charts tell the story of winners and losers. States like Pennsylvania and Ohio saw modest gains in metals jobs, but these were isolated. The Midwest and Great Plains, reliant on agriculture, suffered deeply from retaliatory tariffs. Manufacturing hubs in Michigan and South Carolina also took hits as supply chains fractured. A chart shows 5,000, 7,000 jobs gained in metals, but up to 100,000 lost elsewhere. As tariffs end, the pain in farm states may ease, but Rust Belt stability is at risk. The policy's reversal will redraw the economic map, if managed wisely. The goal ensure growth is shared, not just shifted from one region to another. For businesses, the end of Section 232 tariffs is both relief and risk. Metal-using industries welcome lower costs and simpler supply chains. Domestic steel and aluminum producers who invested billions expecting protection now face global competition and possible layoffs. Consumers should benefit as lower input costs trickle down to prices on cars, appliances, and more. The tariffs had fueled inflation. Their removal could help slow price growth. The workforce faces a complex transition, job losses in metals, but gains in manufacturing and agriculture. The key is a just transition, retraining and support for displaced workers. The challenge, ensure the benefits of renewed trade reach all Americans, not just a few sectors. The stakes are high for both businesses and families. The world has taken notice. The EU and Canada welcomed the ruling, seeing a chance to reset trade relations and lift retaliatory tariffs. This could reopen markets for U.S. exports and strengthen transatlantic ties. Canada praised the move as a step towards smoother North American trade. China's response was cautious. Many U.S. tariffs on Chinese goods remain, and deeper disputes persist. The decision may realign alliances, with the U.S. re-emerging as a champion of freer trade. Allies who forged new deals to counter U.S. protectionism may now look to Washington for renewed leadership. The Biden administration has an opening to rebuild trust and shape global trade rules. The world is watching for America's next move. The Supreme Court's decision forces the Biden administration to rethink trade strategy. The immediate task: balance the needs of metal producers with those of industries benefiting from lower costs. The White House is considering new anti-dumping measures or negotiated quotas to prevent import surges. Pressure is mounting to review other Trump-era tariffs, especially those on Chinese goods. The ruling may prompt Congress to reclaim more authority over trade, possibly requiring approval for future tariffs. Reforms could include stricter definitions of national security and automatic tariff expirations. The U.S. must now define its long-term vision: return to free trade leadership or pursue targeted protectionism. The choices made now will shape America's economic future and its global standing. The Supreme Court's decision marks a turning point for U.S. trade. It brings relief to businesses and consumers, but uncertainty for domestic metals industries. The data shows the tariffs' complex trade-offs and the widespread pain of the trade war. The ruling reigns in executive power and could lead to billions in tariff refunds. Allies are optimistic, but the path forward is uncertain. The administration must balance competing interests and decide the fate of remaining tariffs. America stands at a crossroads: embrace global integration or blend free market ideals with strategic protection. The answer will define U.S. commerce and leadership for years to come.